you can look at the world through a small pinhole and see one part of the room. Unfortunately, if you truly want to understand this great game, you have to actually be prepared to see the entire room. That requires lots of different perspectives. That involves getting into other markets. So you have to vertically be a specialist and over time broaden as well so that you can see why these things are significant. And I say this is significant for metals because your audience will be predominantly metals, and it's part of where you're being taken.
This is Little by Little with Andy Schectman.
Welcome, everybody, to another episode of Little by Little. I could not be more excited to have on with me the market sniper himself, Francis Hunt. Francis, thank you so much for jumping in with us. I really do appreciate it.
I'm really delighted to be with you, Andy. Thanks for bringing me in.
Couldn't be happier to have you here. So let's just jump right into it, and we'll dispense with the pleasantries. I've been following you a lot lately in preparation for having you on, and I'm really taken back by your thesis, and I think it's very, very, very intriguing. People need to hear about it. Let's just start with right off the top. You mentioned that we're in a debt devaluation cycle, and when I think about that, that suggests increasing interest rates. Now, can you elaborate what your thoughts are on this? And just as a side, isn't that kind of contrary to what President-elect Trump really wants?
Absolutely. So you brought two interesting questions. One's the macroeconomic functioning of the system, and the other is one of a personality in an electoral outcome. And I placed the latter a couple of layers and levels below the big moving, the tectonic plates. When they shift, it doesn't matter, who's king of the nation or perceived king of the nation. So I'll start with the big one, which is the movements of money. And essentially our macro thesis, and I do diagrams for this because I always find it's so much more I suppose articulate to show, but I wish I had them up right now. But essentially, we have a legacy Jupiter system, which is quadrillions big, and it's made up of fiat and debt in various derivatives and other instruments, and of course assets, physical assets, and a lot of other things. And it's our overall thesis that we're actually the old houses is racked and ruined, and we are doing a controlled demolition. Think of it as asbestos ridden. It's no longer safe, and we are moving through some form of an umbilical cord, which I'll discuss a little bit more, into this new surveillance finance digital realm, which will give the state its ever more greater power over us, and the surveillance finance aspect will escalate even further. So there's this drive to go digital. There's a couple of themes that all concur with us. But you asked about the debt. The debt to market turn for us in 2020. We saw it technically, and we called it in August, and it's our first bear call ever. In fact, we weren't particularly active in the bond markets, never been the most exciting, typically, apart from acknowledging a 40-year bull since the Volcker era. Also, short history redux. I'll do it really quick because there's a lot to cover. But Vietnam, more munitions were dropped than all of World War II by the US. That's why the French called for the gold over the paper. That led to the excesses, the stagflationary era that saw the Nixon 1971, and then ended up with the Volcker era of Fed, where he actually compressed that debt down by stagnating it, paying below par rates in a highly inflationary, stagnationary environment, eventually pushing the rates right up. That saw the valuations go down. So there's this adversarial relationship between rates. That means you have to pay a bigger yield to attract a buyer, and he's buying at a lower price, that debt instrument. And we had a full correction that went all the way into 81, 82, which coincided amazingly with the last real gold bull market. I'm not calling 2011 a full gold market. It's just getting its running shoes on. And you can see it by effect in relative asset valuations when you do cross-market analysis. So we are actually in a more globally synchronized version of what the US had in over expenditure and over proliferation of debt, only to a degree multiples more. And we now need that compression of that debt valuation. And instead of recycling the old system, there's a new tube coming through that says, hey, we've got something a whole bunch better. And some of the crushed assets, the asbestos building that's going to get controlled demolition is going to be left behind. But we need to take all the Van Goghs and all the silverware, the rich legacy families all want that transported across into the new beautiful house. And that's the process that we're going. So the debt market contraction is part of fiat devaluation buying you ever less, and the bond market being a busted trade. So you should be net short or out. And most people who have pensions have been probably co-opted into it by their pension managers. Let me let you unpack some of that before I, continue.
No, and that's beautiful. And it makes tremendous sense to me, the 60-40 rule. And that's right. Everyone is jammed into stocks and bonds. That's been the prevailing thought, regardless of the fact that it performed so poorly last year.
Can I wail in while you gather a thought? On the 60-40 rule, there used to be between 5, 10, and 20% always for gold in that. And it wasn't 60-40. And we said, this thing, never mind. When we went into a financialization of everything world, where, debt, fiat, once we went free float. And it was, hey, we had a clean run ahead of us. Why have this thing that pays no interest? And it was eliminated. And that's why we got the super suppression of gold that led to its lows in 99 and 2000. And we didn't get immediate inflation because we had this globalization effect. So it was kind of like the global dimming that some people talked about in climate change. You're essentially getting hotter, but there's more pollutants in the air. So the one is masking the other. We were already creating inflation. Assets were inflation. Inflation starts in asset classes. By the time it hits your bread and milk, it's rampant. That's the commodity. These are the things that there's no supernormal profits being made. They are hugely scaled and very tight margin businesses. That's the last straw to drop in inflation. And that's why the stock markets is so hypervalued. That's why we've had housing markets hypervalued. This is all inflation, which is this essentially excess proliferation of fiat. And when people understand that, and gold got suppressed extremely in that period, which actually means you push the beach ball rather low under the water, and now you'll understand the geometry of the excess to the downside leads to the whiplash response of greater scale to the upside at a later point. And that's why it's such an interesting market, and it's spring-loaded.
Absolutely. There's a group called Ibbotson, IBBOTSON. They were purchased by Morningstar. They're a rating agency, a resource or a research company, and they echoed exactly what you said, portfolios that have a small allocation to gold, and they showed the 5, the 10, and the 20% to precious metals, not just gold, perform better than those who didn't. And certainly in the last few years, that would have bared fruit with the 10-year treasury being as volatile as it was and whatnot. So, you mentioned some things in a few of your recent interviews that kind of really opened my eyes to looking at things a little bit differently. You mentioned that all assets are moving towards tokenization. Even purchases, like your receipt, won't be a receipt; it will be a entry on a ledger. And you mentioned that you believe this is the vision that leaders like Trump and Musk are working towards. 2 questions, and the one question I didn't hear you answer, but the first question is, how do you see this transformation impacting the system? But the question that it's kind of burning a hole in my head is, if indeed this is what Trump and Musk are moving towards, to the tokenization, the surveillance state, at whose behest? Who's pushing this? Because what you're basically saying is that this is coming from above these guys. Yeah. Who's pushing the string?
I'm so glad you finished on that last bit, because I'm going to say these are the front-facing personas that you are given. And they have handlers that are often lesser known and kind of in the wings, shuffling on and doing a lot of the grunt work and preparing these
I don't mean to
speeches.
interrupt you. Just one last thought. We think of Trump as having no handlers, but basically you're saying, no, there's a bigger agenda here, correct?
Yes. Not only will you have handlers, the real violent money are people whose faces you've never seen and names you don't know. And they will be the people who will be very secretively in touch with his handling committee, which won't just be one. And those committee people are the day-to-day guys that are part of his group when he flies to, Dubai for a speech or whatever the case may, checking that he's on script, making sure he knows what he's reading, etc. And even someone who's quite off the cuff. And that's why The Apprentice was a good training ground. You can't be camera or media shy. You get your training in Hollywood, in TV programs, and you get to understand the script a little bit. Trump is street smart. He's the people that treat him as a fool is not. He can understand the agenda he's given and what he's pro and what he's against, and what topics not to touch and which ones to touch. And one of the most interesting things, Andy, coming on the Trump, people were fascinated with what's the Trump trade if he was to win. And the Trump trade was entirely crypto. It is virtually crypto. Previously, it's spoken of, the dollar is sacrosanct, and he's been pretty nationalistic, protect America, protect its currency, etc. And there was this key pivot before where he attended the Bitcoin conference, and I saw this as being significant. And actually, rather than going so big in Bitcoin, we went very big into XRP. Because they have had a rev restrictor. So I gave you that Ferrari V12, but then I said to you, Andy, it's running in and you can't take it over 1500 RPM. That's what's happened, courted specifically from the outset. He never tried to be the libertarian, this is your freedom, like Bitcoin did, the narrative Bitcoin did. They were B2B, they went straight to the banks, they went straight to the central bankers, and they said, this is railways for a new system. So in some senses, they were almost more honest than what I think Bitcoin has been. I refer to the Satoshi Nakamoto story as Santa Claus for adults. You're just buying a line. In terms of all of that. And they had to win the harshest crowd over, which was the libertarian crowd. Because if you get the critics of the system over, everyone else follows. They'll say, well, if it's good for Joe Schmo, the cynic who doesn't trust government, doesn't do this, then it's good for me. The stampede runs. Unfortunately, most humans are followers. They look for a lead steer and they said, he did the thinking, I'll go with him. And that's kind of like it. And I always want to do my own thinking. It makes me unpopular and obstinate. And generally, people think of me as argumentative and disagreeable. But I try to do it from a point of view of I'm going to come to my own rational conclusions, and I'll die on them. And that won't mean I'm always accurate or wrong, but they'll at least be mine. And that's something I put quite a bit of pride on. Anyway,
so something you should never apologize for, Francis. You're a thought leader, and I think that's really important, a man in your position. Please continue.
Yeah, sorry, and thank you as well. Very kind to say. And that has served me very, very well. And this is just another example, because that XRP token, even though I don't believe I like it, it's a hold your nose trade. Unfortunately, when we are sitting here as people that seek freedom, and we gold bugs are like that, and I am you are my brethren. We seek freedom, and we want liberty. We like self-reliance. We don't want government meddling in our affairs. You have to put on what I call the hold your nose trade every now and then, where it's thinking up the room and it's loathsome, but if it's for your wealth building and those around you, and guidance for those that need help and are struggling, and you need to give the best guidance. Actually, if you look in the stock markets, who is it? It's Amazon, it's Microsoft, it's now Nvidia, it's all of these, and they are setting up the servers, they're building. I was looking at commercial is a wreck, apart from setting up data centers, which is essentially your data, your future data when you're buying a coffee, and the camera that's picking you up crossing the street after you paid for the coffee, and the next shop you checked in where it's expecting you to buy, where an ad might pop up on your phone, various other things, and all of that stuff. It's data centers. So that part of the market that is run is the mechanization And it is a fascist corporatocracy that is working with state. So you also ask the question, well, if it's not Donald, who is it? You're talking about a group of people that are working through corporations, thought leaders that are put up as heroes for you to adore, and are pushing back at the most objectionable aspects. So think Elon Musk criticizing Starmer about, an immigrant rapist getting community service, and someone criticizing someone on X getting 6 months in jail. That sort of stuff. This is the outright. This is the pantomime, and this is the outrage market where we go, he's our guy, and he does all this posturing. It's all grand old theater, and we've got to keep our eyes on the ball. And too many people, I'm like a laser down that road. I'm not being side-roaded off this path to the truth. I don't think it serves me. I'm sure I'm on lists, but I'm determined to be happy, and I'm determined to give the best quality of advice. And actually, the great thing about gold is we are non-digital. You need to run a non-digital and a digital existence. We're going to have to play inside the matrix and outside of it to survive what I believe or assess to becoming. And I continue to reassess, and I'm always open to adapting my rules. And I'm not seeing any macro changes. I'm making detailed changes only in terms of understanding where the big course takes us, Andy. And so there's going to come a point for gold guys, and I've thrown this up a couple times with the Miles Franklin boys, and some of them got quite harsh comments because people don't like it. Buying the gold isn't necessarily just going to be enough. You're going to end up probably having to keep some of it dark because you're going to have to tokenize that asset, declare it. They want to know when they log into the blockchain what Andy Schectman is worth. They want to know how much gold he has. They want to know the value of his car. They want to know the value of his home, and that he's declared a sufficient value on that home for his wealth taxes that will be coming. And so how do you allocate a portfolio where you're actually in the onset of a totalitarian and corporate fascist environment and retain your freedom and wealth for you, your family, and give the best guidance to your followers? That is my mission. And feel free to drill down on any aspect if you'd want to answer out of that.
Couple thoughts come to mind. Number one, I think the hallmark of an intelligent person is someone who is able to pivot their thoughts even in the middle of a conversation, not married to their thought. I spend 3 hours a day researching 7 days a week, Francis, probably like you do. And you're the first person I've come across who is not either or, who understand, and you call it the hold your nose trade. I think it's brilliant. In other words, what you're saying is you don't really like it, but you are acquiescing to the reality that this is something that can, if on the right side of it for a period of time, can certainly make you money, which leads me to my question, and that's, you've described this crypto cycle, hold your nose trade, an environment where people can make money quickly. But you've also emphasized and sort of alleged it here, or alluded to it rather, the importance of channeling profits into something tangible like gold and silver. And I was listening to an interview you just gave the other night, and you said something, and I'm like, yeah, damn, that sounds right, man. And you said, there are people that get so caught up in the excitement of perpetual gains that it's actually a dopamine rush, that you're actually filled with dopamine. It's a high. And, it's no different than, getting high some other way. And they get addicted to it. And that if they haven't figured out an exit plan now, when the price is going much higher continually, that they won't have it ever. And that not having an exit strategy is critical and can be disastrous. Can you elaborate on that for me?
100%. You are essentially an avatar in a game. And your mental posture is the most important thing. And when you were describing me there, if I was to give you 2 words, it would be dispassionate stoicism. I can't control the outcomes. There's much bigger forces than me. I can certainly push back and build, and maybe if I scale sufficiently, I can be part of a resistance that slows things down. And if I scaled immensely along with other people, thought leaders like yourself, we could maybe slow it down and even put some throw some spokes in the wheels here. But in terms of where I stand now, not to have any illusions of grandeur, You are who you are, and you can only achieve what you can achieve. And so what the goal should be to A, maximize your wealth, but see everything for what it is. And this cycle, these crypto cycles, everybody loses their heads. And what happens, quite correctly, much like the devices themselves, they are dopamine infusers. And there's nothing more addicting. As someone who's a lifetime trader and who was brought into trading for all the wrong reasons, build wealth, look cool, get the girls, all the,
That's
typical
fun though
man
when you're
stuff.
young. That's
Yeah,
definitely
exactly.
looking cool and getting the girls. I don't have a problem with, but
Exactly. And I'm not sure they died that hard either yet. But anyway, inside of all of that, you have to recognize and learn a deeper level of part of the game. And when everyone is talking about the excitement, I actually speak about talking everybody down when they're excited. And when they're in the bear and the doldrums, like the big gold doldrums that we'd had for a year, actually reminding them of why it will come. And the reason I do that is our personal individual volatility, and it's ironic, our method is a volatility funnel, but your personal volatility, your ability to hold a line, if you are less volatile than the aggregate participants in the market, you are going to win. When you are the same or worse, you are almost assured destruction. So that is the volatility of person. How affected are you by the dopamine hits? How giddy do you get? How drunk are you getting by that? Can you hold your liquor in the terms of the dopamine analogy? And do you have the mind? I use analogies. We all were teenagers. We go to parties. The smart guy socializes great, chats to all the girls, gets a few phone numbers, doesn't drink too much, gets in his car, doesn't drink at all if you're in America, gets in his car and gets home by 12 o'clock and still has a decent day tomorrow. The guys that get into the drinking games, get into the fights, that the witching hour that's between midnight and 3 a.m, that's when the cops arrive, that's when the heavy fuels come out, and that's when people crash their cars into trees. And I'm talking about the crypto cycle now as that analogy. And you have to be thinking more and more of exits the deeper you get in. And you retreat from markets. You need to be aggressive early when it's hard, not aggressive when it's becoming more and more confirmed. Essentially, everyone is a momentum chaser. And this is how it happens, Andy, psychologically. When you want to get in something and you think it may move, but you actually want to reduce the risk to the point where you only get in it once that possibility is now a fact. So that makes you a chaser. And actually, you have to set the plan before and be in early before. So April this year, we secured our options. Ripple was 48 cents. No one was bullish. And every time it went up, it got smashed back down. Now, people that told me in YouTube comments, it's going on flat it's never going anywhere. It underperformed the previous bull market, all of these things. And I say, those are all the positives why I'm getting in. Because the rev limiter is going to come off, because they will get rid of Gainsler. This resolution, when you have a cloud of uncertainty on the alt markets, particularly on Ripple, that was brought about by the system actually governing how much it would grow during that period. They were restricting it so that they could unleash it later. And you had the opportunity, and it's kind of like the gold and silver discount window, actually, Andy, to bring it back to that. People need to exploit the discount windows for what will change. And it's the classic, to use a North American analogy of the Wayne Gretzky. You play the puck to where it's going, not to where it is. So I'm sitting, and all the reasons the guys were saying, but Ripple never moved, Ripple never did. They are going to be the central banker's coin, this digital. So I have 3 brands, the Reset Sniper, the Market Sniper, and the Crypto Sniper. The Market Sniper, traditional markets, the crypto, obviously crypto, and the Reset Sniper is the understanding of where we've been taken. Those 3 things overlap, and I'm in that sweet spot. That's why we're the sniper. It's the overlap of all those points. Understanding the end, and great author Steve Covey, I'm sure that someone, a learned man like yourself, probably read at least once The 7 Effective Habits of Highly Effective People. One of his key steps was, and it's been a while now, so I'll get the number wrong. Someone will put in the comments below for engagement on Andy's video, please, which step is begin with the end in mind. And I like to know where we're going, because then I'm much better at guessing. You see, I want to cheat, Andy. I want to know where the road is taking us, because then I know where we're likely to stop along the way. And I refer to our methodology as news before the news, because we guess well often, not universally, because we are building a view, and that reset view is quite clear. And we get lots of clues. Unfortunately, they've gone so far as to tell us. It's kind of preceding. It's the Hollywood movie of pre-crime. I'm almost laughing. Let's take a sidebar. This is kind of an intense discussion. You've got Biden contemplating a pre-pardon for someone who's yet to be accused of something. And I'm saying, how much do I have to donate to the Democrats to get 10 get out of jail cards for some pre-crime of some crime that I haven't even thought of, but the grand AI will decide that I'm potentially guilty of? And that is the bizarrity of the cacocracy we're getting into right now. It's pre-crime, it's thought crime, and it's pre-pardons now. So, will there be a secondhand market on the blockchain somewhere where I can buy some get out of
jail free? Yeah, I mean, I think that would probably be more valuable than gold to many people.
It's one of the few things. Yeah, but anyway,
it's stupid to be stupid. You can't make it up. In listening to this, I wasn't going to ask you this question, but it pops into my head. How much of this is technical analysis and how much of it is just trying to understand the bigger picture? When I think of anything in life, anything that I talk about, to your point, I always start at the end and work backwards. I think if you don't, you're just kind of spinning your wheels. I think if you start even when you're having a discussion with someone or a debate, you understand where they're trying to get. You understand where you're trying to get, and you find a way to get there, and maybe amicable to both parties, or maybe just making sense to what your own personal opinion is. So how much of this is technical analysis on your team's behalf, and how much of it is a bigger picture, understanding the macro perspective, if you will? I know that's a focus of yours, so be interested to know your thoughts on that.
We are both, and we're incredibly lucky, because this is the beauty of things. If you are pretty accurate on the reset side, you know where to look in the charts, and we regularly find our idealized macro structure. So that particular XRP trade is actually a macro 7-year HVF setup. So you get the double endorsement of the technicals verifying, and it sometimes comes in different orders. Sometimes I find a great chart and I don't have the story. And sometimes I have a story and then find the great chart. So the key thing is I have a double verification process of a likelihood of event, and that improves probability immensely. It fits the reset, begin with the end in mind, where are they taking us narrative, and then you have the technicals, it's moving in that direction, this is what the chart is showing me. As I say, maybe not for this time, but I can show you those ripple setup.
You're more than welcome to pull up whatever you'd like. Yeah. I'm happy to let you do that if you'd like.
Yeah, let's do that. I mean, I'll just point out that the other thing is, I like to sometimes say, we spent on that particular trade, it looks like overnight wealth. And you spend a lot of time in preparation and stalking. It's kind of like the hunter. You spend a lot of time in preparation and stalking to get overnight rich. And I think as someone who's very successful in business and life, that applies to you as well. And it was very much like that on this XRP setup. And I know for some people who are in the gold space, they'll be saying, wow, I'm hearing a lot about cryptos. I just want to hear about this. And you can look at the world through a small pinhole and see one part of the room. Unfortunately, if you truly want to understand this great game, you have to actually be prepared to see the entire room. That requires lots of different perspectives. That involves getting into other markets. So you have to vertically be a specialist and over time broaden as well, so that you can see why these things are significant. And I say this is significant for metals because your audience will be predominantly metals, and it's part of where you're being taken. This is the big breakout. I'll just reduce some of the lines here. There's a lot of a mess. This is our favorite structure. It gave it over there when it was first released. It's a squeeze in the volatility. People refer to it as a symmetrical triangle. We think that's technically inaccurate. We've written our own technical analysis book, if you want, for how this should be treated. But this was the setup, and we look for the third, the final washout. And we've been tracking this since 23. the first half of 23. So it took till 23 just to get the single candle, which is a substantial move, by the way, because this is a log scale chart. So I should probably show it in regular scale so that everyone can see a little bit more about what we caught there, and that we were in this assets over here, and options also bought over there. Because you've tracked this particular structure technically. Plus, then I'm also seeing the articles of what this guy's doing. What it then does is I see the technical first. We go and say, well, who's behind this? Who's this guy? And you see he's lobbying. He is very focused. This is not a guy for retail. He's lobbying the banks. He's lobbying Microsoft. He's lobbying everybody. And then he's had his company held back, or his token and business held back temporarily by Gensler, and here comes the Trump trade. And
he's on his way out too, Gensler.
Indeed, he's out, and in fact, they've already appointed somebody new. And suddenly you realize when you have quadrillions of legacy assets, and this is going to be a railway system for a new, slowly inflating beach ball that needs to get to the size of Jupiter, there is incredible wealth that will be built out of this. Despite the dystopia and me sounding super black-pilled and maybe making some people feel a bit bummed out, I'm here to tell you, and this is a message I want to give because I know a lot of good people there, and I hate the idea that I just ruin people's day.
While you're holding that thought, don't get rid of this chart, because finish your thought, but don't get rid of this chart. I want to ask you a question when you're done with your thought.
Sure. You were born into these times because you can cope with it. You can occasionally feel over, totally bummed out, and it's also terrible, and all these totalitarianism. This is your experience you were chosen to have. And you must play the cards you dealt with, and you were chosen for this. So you are special for being alive here alone already. Don't get down by it. Seize the opportunity and be the best that you can be inside the circumstances of this that you've been given. You could have been a 16-year-old being the first shot getting off a beach landing craft in Normandy. You didn't have that experience. You've got this one. You get to live. You get to see a certain history unveil. I'm telling you, it's economic case history that they'll still be looking back 500 years from now and saying, what were those people thinking? Well, it was a grand synchronized plan as far as I'm concerned, but you can come to your own conclusions on that. But you've been chosen to run this obstacle course. Get fit, get healthy, get self-reliance. It's not just about building wealth. Love, live. I tell all my community members, I've given you a lease on life for 1 year, and it could be revoked at the end of the year. That's how I want you to live your next year. And it's almost like you've got a dreaded disease, but there's no symptoms, and it takes you in a year's time. If you play that year well, you live, you spearfish. I mean, I'm going riding in the desert. I'm learning to spearfish. I'm spearfishing. I'm living my best life. I'm very fortunate. I'm blessed and lucky. And I encourage all my community members to do that. And if you really use the time you've given, you're not sitting watching TV, eating popcorn, and saying, well, the world's going to hell in a handbag. Let's just sit here and hope the government will sort me out. If you get another year, and it's kind of like the arcade game where it used to flash, I'm an old guy now, extended play, you get another chance because you raced well, you've been busy, you've collected points. And you gamify this existence entirely and say, I'm going to win the game. As males particularly, which I'm sure you'll have a lot of in your audience, but I want the women to come along with us. Gamification takes all the stress and the tension out of this. We're just playing a game. Collect some chips, live some good life. That's the game. And find a way to help others to work their way around the system. There'll be a lot of craps for us cockroaches to hide in when these guys come. We can have a great existence. And then eventually, out of the blue, some windfalls might come that might stymie the system. But don't rely on hope. Go become that self-reliant person. So this message I want to say to everybody, get fit, get healthy. There's stuff coming down the channel. Get secure. So security, all of that. Build community. Guess what? It's called awesome living, and you should be doing it anyway. Yeah.
Francis, I love that. In fact, I've even commented to myself recently that it's just tiring always being pessimistic and looking at what's happened over the last 4 years and how it has the ability to drag you down a little bit mentally. I love your positive message. I love the fact that you're acknowledging that this isn't, perhaps, maybe it is, maybe it's not, but it has the appearance of perhaps not being the road to retirement, shall we say, but it is a pathway to enrichment that if you don't take, you may look back on and regret. Now, when I look at that chart,
Sorry, bring it back for you there.
yes, when I look at that chart, I see this is probably not the time to get into XRP, or is it? Are you expecting, just like we've seen in the two previous peaks preceding, do you expect to see it pull back significantly again like we saw those two times?
Yes, I've taken you back to log scale because it's almost crazy tunes having a look at that. So crypto is kind of like the dog years to gold and silver, 7x type dog years supply. If you think of it like that, it's just a simple analogy. A lot happens a lot quicker, but everything's a bit more violent as well. So log scale is kind of a necessity. So overall, Andy, we see the 20 being run. The $20 being run, and you're at 250, and there's possibility for more beyond that. Right now, if there's someone watching this video right now, should he be jumping in leverage long right now? Absolutely not, because you've just had a sizable leg. There can be a cooling off period. In fact, Bitcoin today ran 100K. We were lucky to be pivoting back into that on our trading. We had a setup for that, and I will show you that too. And what that tends to do is it takes some juice out of the alt markets, and it puts the priority on Bitcoin. So the appointee of the new SEC head, forgive me, I haven't got the name to hand. Again, guys, put in the name in the comments below for Andy's video so that everyone else can see. I don't yet know the character, but he's deemed good for crypto. And the god market of crypto is Bitcoin. So Bitcoin sucked all the honey that came into the system. The institutions have the ETFs already for it. So if they want to do a crypto play, initially it goes into Bitcoin. But there will be ETFs coming for this token, which is now the third largest. It flipped Solana and it flipped the Tether market in market cap as a result of this move that I'll put in the pink box for you. And this is a very important move. So whoop, that's a bit too big a pink box, but you get my meaning. So it's given it quite a surge, but it's probably not timing wise. So investment wise, if you're, again, it's kind of like gold. If you're going to put $100 a month away out of your paycheck, knock yourself out, accumulate, put in a cold wallet, you'll aggregate in as it has a pullback. This is a tiny shooting star. We call this technically a shooting star. So that means for this month so far, you're on the low end of the range and you got rejected. And that there's a 2.5 that's there. 2.5 is going to be a key number. You see the blue number there that I'm highlighting. So that's a kind of, you tend to get this at, and it's called pegging. The derivatives markets, and there are derivatives already on crypto, law of round numbers tends to play a role. So you're probably going to do like Bitcoin did. It balked at the 100K, it pulled back for a while, it churned for a while, needs to wind up, and then it goes again. So it's probably not a time to wail in with your granny's pension fund with any form of leverage, but slowly accumulate, definitely.
Yeah, we're going to have to put a link to your trading service and the services that you provide below, because you've really got me interested in learning more about what you're advising. And like you, I am open-minded, and I think people who learn more and more about less and less till they know everything about nothing are making a mistake. And while gold and silver to me is what I know, I am always open into listening to logic. And you are bursting with logic. Let me ask you another question. And this is something that I really find interesting, and I'd like your take on it. So, you've talked a lot about the value found in Bitcoin and cryptocurrencies and their hedges against, the systemic financial instability, et cetera. But you look at the stable coins, which you've talked a lot about, USDT, Tether, and USDC, similar to Tether. I think that's backed by Goldman Sachs.
Yeah.
Their balance sheets are nearly 85% U.S. treasuries and dollars, and they use that as collateral. And this, as you've alluded to, ties them to the legacy financial system. Do you see crypto evolving truly to disrupt traditional finance, or you mentioned people pulling the strings up high. Is it inadvertently, or perhaps not, but as far as the people are concerned, inadvertently reinforcing the systems that those engaging with are seeking to replace?
It's a fascinating question and observation that you've made there. So we noted when we called the top in the treasury markets, the tether market was being continually harassed by the SEC. So USDT was under perpetual threat. They were most threatened by tether because it's essentially the dollar, a digital version of the dollar. Then, instead of holding Bitcoin and other tokens as collateral, they pivoted to be a buyer of treasuries. Just at the year, we had just finished saying the 40-year bull market was over and this asset was going to do the escalator down, the elevator, let me correct it, down after doing 40 years of escalator. And by the way, I'll just bring that chart up as well because it's worth seeing. We shorted the TLT before it even had made a head and shoulder. We were so confident of it going down. The TLT is a long treasury bond market. Yes, that's right. And this was in 2020. We were short here, up at 161 on what's an inverted HVF. It's a complex thing. I won't get too much in. Later, you came down to the neckline. We expected a bounce when you hit 135 because we were looking for a macro reversal like a head and shoulder. And we reiterated as that head and shoulder broke. This has been the performance, the capital value performance of the debt market since that call in 2020. In short, you've gone from 160 all the way down to 93. And by the way, that might not sound too much. It's devastating, by the way. Bond markets were supposed to be boring and stable. They didn't give the alpha, the equity markets did. Bond markets just did a little bit better in the bad years because the scared equity traders moved into the bond markets. So every time markets were a bit toppy. So it was a counterbalance in bad years for equities, gave you a small yield, and generally inched upwards in capital value very small. Now, what you've actually seen now is that no longer holds because you've had this stable asset that you accepted because of its low volatility, much lower returns, now fell from 179 and then the low so far to 82. So now the super stable asset can lose 50%. Well, hang on then. If I'm losing 50%, I may as well be in Bitcoin because you can lose 50% in a bear market in Bitcoin, but at least you go up 10 times on the upside. So the risk adjusted to volatility aspect of bonds has been turned on its head since 2020 due to the proliferation of the CV19 events. And that is that trillion that Yellen is creating every 100 days. The last time I checked, it's now 81.5 days. Of course, she's going to be out. But Trump can't turn that liner, that oil tanker around in a day. Let me tell you, and most expenditure, the amount that's actually discretional is surprisingly small. Contracts are committed to over multiple years. And legalese happen if you start saying we ain't paying that. So you can, with all the best intent of Elon, and Elon is a little bit famous for shooting from the hip, if you'll excuse me, in terms of Tesla deliveries, the truck and various other things. So he'll come with top line ideas that in practice sound great. Of course, you can do it if it's your own company. You can't just wade into the government and start firing people. Government employees, I wish actually it could be that way. I wish for those employees actually too, not because I want them damaged. I want to see them self-actualize personally and get to their higher self by having to make a buck of their own. Because until you've done that, you haven't grown and learned. But they won't thank me for saying that. But you do that journey, you're a bigger man for it. But all that said, there's no way you can turn around the red ink over here. So that debt market that I was showing you, the TLT, is an absolute turn, and people have realized that. And the amazing thing is, 3 years later, we had Zero Hedge, who's usually the first, and then Stanley Druckenmiller, Paul Tudor Jones, all saying it's kind of over for debt. For us. And that's the value of our technical expertise. We don't think of ourselves as brilliant in any way. We aim to be very humble. I just think I'm the only macro technical person that talks aloud about his views. There probably are others, but we're not the best. We're just the only one. And that helps to be the best. If I'm in a male beauty contest, I want to be in the scar-faced, bald-headed competition, then I'm the category killer, apart from I might have to kill off seal. But,
That's funny.
define your category and win it. And if you're one of one, you're the winner. And where was everybody in 2020? And what made everyone think you could splurge like that they eventually wouldn't come the end of the market? And the interest rates from here on in will be mild pullbacks and followed by big runs. And we made a prediction on the US 10-year, which is something I know you'll be somewhat familiar with. So this is the turning of rates since the capitulation. And so many people understand in the NASDAQ that you got to blow off and it was the end of the market. And in spilling markets, you get a capitulation, technical analysis. It's the same thing, just to the downside. This was your capitulation in March 2020. You know what happened there, 0.3. That was the end of a 40-year downward move in ever trending. This is again log scaled because of the duration that here. Here's Volcker up top here. You've just finished the gift that Volcker gave everybody of crushing the debt that was raised in Vietnam. And now throughout this ever lowering rate environment, including the petrodollar, everything occurred in this period of Volcker. Nixon and the petrodollar in 71, the Vietnam War, and then the rate hikes that led to the gold rush. All of that's happened, and we're now ready to do it all over again on a far greater scale. Only we can never get up to these interest rates up here because America back then was a far stronger America. It exported much more. It had a much lower debt at the time. That's why you could afford the higher rate. You can't do that. The system is 10 times more sensitive because you load it up on lead all the way down. Your plane can't take off anymore.
So what does that say for the legacy assets then? If we're moving the other direction, isn't that kind of the kryptonite against the legacy system?
It is. It absolutely is. So here's how the average, and this is my evangelical message to save people. If you want to see me as John the Baptist, I'll never put myself forward as the big G or anyone else, but I'll say I'm John the Baptist, is people need to get out of interest rate-based, financially levered assets, which is why I'm concerned for property, particularly. And US guys that have a portfolio of Airbnbs, but you've only got 10% deposit in them or 20%, even 30 or 40% in them. And, you've got a portfolio of 10. You feel rich. You think of those values, how much they went. Let me tell you, you aren't. You're standing on 10 landmines and you're about to get out of bed. That's how rich you are. The interest rate spikes that will come, and it can lead to a dollar surge initially, which is counterintuitive, but the interest rate spikes that I think will come are not too far away, and it's all debt-based crisis. And the money buying power at the same time as debt is devaluing, the fiat that was borrowed into existence. They're twin sisters. They're like a twisted sister. One goes with the other. They're Siamese twins. They're pig ugly. And the one can't get killed without taking the other one down. And your buying power is going to go down at the same time and is going down. You're witnessing it in the market. We're calling a falling wedge. We said this is going to turn, actually. So we tightened, Powell tightened, and actually the 10-year went up. I don't know if you recall this, quite recent history, the last 3 or 4 months. And we said we're going to get to this because we're already preempting a falling wedge flag-like structure. This is the value of my technical. I put that blue flag, believe it or not, when that green chart was here. And I say, I think we stop here and we revert back down. Now, the reversion back down, Andy, is potentially a fear because that causes a little bit of washback back into bonds. What do people do when they're afraid? Think globally afraid. They will go back into the dollar. It's the most common proliferated, and you will get washed back into the debt markets. If the stock market was to correct, it's not all going into Bitcoin. It's not all going into my XRP as much as I'd like it to do so. And it's not all going either into gold. Some of it will, but actually you're going to get safe haven. Where's Warren Buffett put his cash that he's getting out the equities? He's the lead steer. Where is it? He owns 4% in treasuries. He's got more than the Fed in treasuries. So that is a fear indicator, and I'm watching this, and that's why people get so frustrated with me, because I say, listen, guys, we've also got to watch out for a demand-destroying event. And here are your big indicators for demand-destroying events. Debt markets going up in value, rates going down, and you could go all the way down to here before. By the way, on a longer time frame, this comes and it breaks to the upside. So what I'm saying, interest rate spikes, is on the macro. So you've always got to understand what time frame is Francis giving this opinion. Short term, medium term, down, fear. Longer term, devaluation of debt, higher for rates.
So what does that do? I mean, at that point, real estate, the bond market, the stock market, the banks. So, well, that leads me to a question then, Francis. I mean, does this mean we're heading towards a systemic reset? Is that really what you're getting at?
There's going to be an event. I think they're going to lockstep us into this totalitarian system with a critical event, yes.
And what does that mean for gold and silver ultimately?
Initially, down, because everything that isn't nailed to the floor gets sold. Longer term, immediately, and less so down than the other things. Remember, that will be a disinflationary moment where cash is almost king. But we know cash long-term is not king. It's devaluing chronically. But initially, so people will need to sell things, etc., etc. There's going to be forced selling. Whenever you have a situation, the problem is too much leverage, too much financial engineering and too much leverage. When you get forced selling, even good assets have to get sold. But they won't go down anything near like the hyper overvalued stock market potentially. Gold last time during CV19 shrugged it off. It did go down, but it shrugged it off. It's worth reminding you of that chart. It was actually pretty damn strong. It was already in a bull market. Let me just get the gold chart up for you. And remind us all, because I like to see it myself. That was such a beautiful entry. We did it with Donegan over there. That's set up there. It's such a great shoot. But let's get that March 2020 into sight. That was your March 2020 event. It's shown us. You've had a microcosm, and that was the stopping of the entire planet, the SMEs of the world being closed. But of course, Amazon could send you stuff online. That crashed and pumped straight back up and continued to make a new high. So that's what you get. If you've got no leverage, all you do is you focus on buying more with your cash holdings on the sell-off. And it didn't go down a massive amount. The other thing I highlighted, which is that everyone will talk about Bitcoin doing much more than gold, etc., etc. I want to refer you also to August of this year when we had the yen carry trade ructions. Bitcoin made 70 and spilled. I will show you the two back to back. And spilled all the way down to 49. And that was around 30 odd plus %. Gold fell 4.9% and then traded back up. So it was August. I mean, gets that one up again. Where was it? October. You were here. September. Here we go. July into August. That's when we had the carry trade. It was August the 5th. That was your correction on the carry trade events on gold. Now, if I measure that for you, you'll see it's sub 5. So that was probably so far this year one of the most squeaky bum moments that we had. Not a big one. It wasn't March 2020, but there was a little bit of a ruction, and the stock market shed a fair amount, and a lot of people suddenly becoming internet experts on the carry trade. I don't know if you remember that had never looked at it before. But that was, there you go, 4.47%. If I take you to Bitcoin and show you that, same period, and it was quite fun because we had a call that you'll get up to 70. It was around about here. Let's go 4 hours to go back. There you go. Yep. You fell from the 70 up top there, and we had a top. We actually got a video saying you want to sell at 70. We didn't expect it to go down that bad. We didn't know it, but we said pull back there. You hit our capping descending grind line and the 70K again, which had been proven resistance repeatedly. And that was a huge sell. And this was the acceleration part that brought you to sub 50. You can see that. Now, percentage wise, and this is the value of both. Everybody wants to be mine's better than yours. You get some people that talk about Bitcoin the fastest horse. Well, I don't even think in crypto it's the fastest horse anymore. But who wants a fast horse when you need a steady horse? Sometimes you need a steady horse. If you want to plow a field, you want a steady cold blood. You don't want a racehorse that gets lame and is temperamental. That was a 30% 30.08 correction. So in an environment where the system is such at risk, you bet your life I've got gold and I'm eating the 4% pullback and I'm buying more rather than taking a 30% dip on my assets. So you have to have a mix of both. And that should be your 60-40 portfolio, gold and a crypto. And depending on your age group, you'll vary that percentage and your risk profile, obviously. And I would say, let's say for now, you're aggressive growth and you're in your 30s and you're a male and you're pretty well set and a decent job. Well, you could make the 40 the gold. It could be 30% gold, 10% silver, for example. And the 60 could be, 20% Bitcoin. And I could put you in a few statist, hold your nose varieties that I expect to do very well, other tokens, and you could go for the growth. And then as we get, the interesting thing as well, Andy, is that timing-wise, I already know we should have a time stop loss as well as a price stop loss because things suddenly happen. Bear markets suddenly happen. I know from October of 25 to December of 2025, 1 year from now, I will be retreating regardless. So I have a time stop and be taking off because that's typically the cycle that's been. I do think there's a possibility, and this could be a greed genie in my brain talking, so I check it, I recognize my bias, and I park it there. But I do think we're going to have an extended cycle on the altcoins this time because we had a suppressed one last time because of the SEC, and they're in a hurry to bring about their digital system. But there's nothing wrong with taking 50% off at the time point that is right and starting to back away from leverage trading, reducing some of it. Where do I put it? It goes into the 40 and the 40 becomes 60 and the 60 becomes 40. And then I see, okay, extended cycle. I've got more in gold now. And that's how I intend to play it. And this is the kind of thinking. If you aren't thinking about exits, you get an exit forced upon you. And they're never good, Andy. They're never good when you get an exit forced upon you.
I'll tell you something, Francis. You're a very logical guy, brother, and brilliant. And I would love to sit down with you and over a bottle of wine or three and really go deep with you. I think I'm going to call this video the new 60-40, and I think you make some compelling arguments. And again, I'm someone who my whole life has been precious metals for 35 years. Yet I am not so married to my own mantra, if you will, to not acknowledge the logic of what you're saying. And I really appreciate you for sharing your wisdom. I really do. And you've intrigued me to dig deeper. For people who want to find you, and by the way, I'd love to have you back on after the new year and see how things are going because, you're the only one I hear saying this kind of stuff. And it's everyone else is either or and one side or the other. And I like how you have an open mind. You've married technical analysis to macro analysis to an open mind and very pragmatic. And I think that's admirable, to say the least. How can people find out more about you, myself included, and about your service? How you can help people achieve what you're so passionate about, and with a great track record, I might add.
We see this as one of the single most unique economic, financial, transitionary events that you are probably going to be able to witness for all economic history that we have written history. And all advice that is of the traditional financial advice is likely to be more destructive than valuable in a traditional sense. I'm not a regulated advisor, so first of all, I tell you what I'm doing and you do what you feel. But we truly, truly think that this is not just financial, but it's actually lifestyle. It is freedom. There's so many bigger things. This is my life. I'm finally that guy who found his mission. And I'm messianic about it. And unfortunately, I would have made a terrible liar. I puke it exactly as it comes out. And it's the only way I feel safe. I can't even remember where I put my keys. So I'd never be able to run a story with anyone. I tell you how I think it's coming and I adjust it. And when I remember, I say, look, we've adjusted slightly here, but this is what's going down. This is going to be a very polarizing event. There will be those that come out of this that are in a poor state and a ward of state and will go with whatever state tends to do with you. And I don't trust state particularly much, especially given recent events. We can delve on that somewhere else with that glass of wine. So the importance of the leader of the household and the family members to be together about building self-reliance, wealth, but more than that, wealth is happiness, lifestyle, your own food, your own land, helping others and community at a localized level is never been more important. We've got to go back to being what we once were, the frontiersmen of America, and I'm here to help people navigate that with macro technical analysts. And I do say there's very little voices that share their thoughts. I feel like the only one at time, and resetonomics. And if I've just made up a word there, then that's what it is. But I intend to help everybody navigate this transition so that they come out substantially better, as apropos the 95, even 99% that I actually think are going to be devastated by a lot of rug pulls on an epidemic scale from banks, financial, fiat, orchestrated hyperinflation. It's kind of a stagflation. I referred to it as hyper stagflation. Hyper technically refers to double digits. Normally, I think we are there. And stagflation is the lack of growth. This is going to be a pincer group. You're getting the reverse Greenspan Goldilocks economy, because you have to take the hangover that went with the drugs. And those that position well for the new system will come out of this, and wealth will buy you some freedoms and better quality of lifestyle. My goal is to help you achieve that. You can find us on the Market Sniper YouTube. I've actually been talking a lot more through the Crypto Sniper right now, because we pivot our attention as the dominoes. We're not only interested in what must happen, but the firing order. I look at the engine and I want to know which cylinder is going in what firing order, because it allows you to position through the process in doing this. And we have HVF method. It is bespoke to me. It's totally unique, and it allows for trading in a very asymmetric manner, where very fast moves take you away from very tight stop loss entry. It also utilizes for investors. You don't have to become a trader. We're not 9 charts. I have just this laptop. I don't have 9 screens going on here, and I get out the house a lot. We position, trade, and invest. And that, if you can achieve this, you're going to be able to afford happiness for your family in whatever system we meet, and you'll have a community of high achievers and fellow members that are cynical of state but determined to have their best lives. And that's pretty much how I define myself.
God bless you, Francis Hunt. Amazing. Thank you for coming on. You've opened my eyes, and I'm sure going to open a lot of people's eyes when they see this. And the gold bugs need to chill a little bit and not get angry when they hear something that isn't exactly married to their narrative. In the end, you are saying that gold and silver are integral, but this is a once-in-a-lifetime opportunity, maybe a once-in-a-generation opportunity. And I respect that. And I think to not acknowledge it and learn and broaden your horizons, again, you learn more and more about less and less till you become an expert on nothing. That's not you, and that's not me. And I'm glad to have had you on, and I hope you've expanded people's minds. You have mine. I will look forward to picking up where we left off, and it's with a deep sincerity. Thank you so much for coming on, brother, and I look forward to picking up with you again real soon.
Really look forward to that, Andy. Thanks for having us on, and God bless to everybody out there. Remember, participation isn't endorsement necessarily of their long-term goal, but do the best for your family, yourself. Your greatest loyalty starts to self and family before state and nation and everything else. And we look forward to you. And by the way, one small little throw-by, there's a free course in our YouTube material. People are welcome just to get a little bit of an intro, a 5-minute video each day over 5 days. It's entirely free, and we don't spam emails either. So
if you'll be so kind, Francis, is to email me that, I will add that to the show notes, and we'll get people to check that out. And I think they should. But again, thank you very much, my man. I hope you have a great rest of the year. Happy holidays, happy, healthy new year to you and your family. I hope 25 is the best year ever for you. And don't sell yourself short. I think you'd do well in that beauty contest. You look good.
I'm going to own it, but I'm going to make sure no one else is on the stage, Andy.
Thanks again, Francis.
All right. Cheers.
Little by Little with Andy Schectman.